Hello traders and welcome to another video review. Today is Monday, the 22nd of August 2022. Let's find out what's going on today's Forex calendar. As you can see, the Forex calendar is almost empty for the events that might influence the Forex market. We got the Chinese loan prime rate that had been cut from 3.70 to 3.75, and at 2:30 we got the new housing price index from Canada that should increase from 0.2% to 0.3%, and that's about it. So it looks like we have a non-event day. However, we can still take a look at the technical charts at the various time frames. So I think that at the beginning of the week we should start with the majors. So let's find out what's going on the euro dollar. Euro dollar daily time frame chart, as you can see, looks like this. Let's switch to the 4-hour. Okay, let's stay on the daily. However, what do we have here? We've been talking about this ABC to the upside for almost for most part of the last week. We completed the ABC at the 61% of the Fibonacci retracement of the last wave down. The pin bar was made here. Apparently there are two pin bars here around the level of 1.0362. The high was at 1.0369. So what do we have here is a typical corrective bounce to the upside, and as you can see, pin bar, confirmation, extension, bounce, extension, and what do we have here? Well, the technical supports around the level of 1.0122, 1.0097 had been violated, clearly violated. This is daily time frame chart. So next target is the parity level of 1. So the 1 euro is equal to $1. However, it looks like the bears wants to test the lows of the 14th of the July 2022. This low is at the level of 9,953 pips. So this might be hit. This level might be hit even today. So please stay awake, stay focused. This development to the downside on the euro dollar looks impulsive. So there is nothing wrong with the current ABC to the upside as the wave, as a corrective wave, maybe wave 4, and the last push to the downside might be the 5th wave of the impulsive structure. As we know, all of the impulsive structures must have like 5 waves. There is still a room on the RSI on the daily time frame chart towards the level of 30, which is the extremely oversold level. So we, as I said, we might see very shortly 9,953, the lows of the 14th of the July tested, right? So please notice the fact that euro dollar is still under the bearish pressure. So if the euro dollar is under the bearish pressure, what is going on the US dollar index? Does it rally? Yes, it rallies. We have minus 4.26% correction, right? That was the biggest correction during the uptrend. We have a multiple as you remember, multiple bearish divergences. Finally, minus 4.26% correction. We have the short-term trend line violated clearly here. 2 days of trading around the 30-day moving average, breakout above the technical resistance at 107.45, and we are heading towards the highs from the 14th, of course, of July 2022. So this is exactly the day when the euro dollar reversed to the upside. This high is at 109.26, and it looks like the market wants to test this level or even violate it, right? So momentum very positive, very strong, 63 points very strong momentum, bullish momentum to the upside. So please consider the fact that we might see new highs on the US dollar index, which is currently being bought all across the board. So that's the US dollar index. If the euro dollar is going down, US dollar index is going up. What is going on gold? I'm wondering what is going on gold, and gold is going down. Take a look at the situation very seriously, because it looks like the money flow on various markets, on euro dollar, on a dollar index, on gold, we will find out what is going on the stocks as well. This money flow is very typical. This is what it's supposed to be going on if one of the assets has a strong move. So on the daily time frame chart of the spot gold market, we can see a sell-off from the upper boundary of the supply zone, $1,807, so just above my previous level. So this level, of course, after this pin bar was made here, and bearish engulfing looks like it was made here, we got 1, 2, 3, 4, 5 down candles. This one looks like the down candle as well. We are now waiting for the 61% of the Fibonacci retracement of the last bounce up to be tested, 1,729. If this level is violated, the market will be below this orange trend line, which means bears are in charge of this market. Already the momentum strongly points out to the downside, and the spot gold market is under the bearish pressure. Investors, traders are selling gold, buying dollar, of course. So this is according to the overall money flow. Let's find out if the S&P 500 index supports our view. It should be going down, and this is the situation that is happening. As you remember, last time we almost hit the level of 200%. Let me just change it to the percent. There you go. This is 200%. 200% of the extension of the wave A measured from the lows of the wave B. So this is around 4,353 points. The high was made like 27 points lower, and this might be the top for the wave C. Let me just show you this level here, and we will right now put the horizontal line on the top of this level around here. This is of course the technical resistance made of the swing high. So we didn't hit the 200% level precisely, however we were very close to this level. This is still the key level right now, and we are, please notice this situation, we are again moving away from the trend line. We've seen this before. New lows, bounce, new lows, bounce to the trend line. We should do a new low towards the lows of the middle of the June, 3,634, or even towards 50% of the Fibonacci retracement of the last wave up, 3,503. Okay, so right now, what should we be focused on? On what levels we should be focusing on? This level is, of course, the demand zone between 4,114, 4,180. If we break below this zone, of course, then there is 30-day moving average, roughly around 4,075 points. And the lower we go, the worse for the boost, because if we break below the key level from this kind of a Elliott wave scenario, 3,941, we are now have the confirmation, if we break below this level, that the impulsive scenario to the upside is invalidated. Okay, so please keep an eye. I will just put my candle here. Keep an eye on this level as well. This is the key Elliott wave level, and the key technical level is the demand zone here. So S&P 500 going down. Let's find out what is going on the Bitcoin, and we have a massive breakout to the downside. Let me just zoom in here. There you go, one more. Okay, what do we have here? We have a breakout below 61%, so that's a history. And the most important thing is we broke out of the channel, stopped moving down with this pin bar, daily time frame chart again, lows of 20,804, just above the technical support at 20,716. So please consider the fact that we have a down move. 1, 2, 3, 4, 5, 6, 7 down candles had been made already since 25,000 supply zone has not been clearly violated. We are out of the channel. Even if we let's say, oh, there you go, even if we change our channel to this situation here, to the newest data, okay, we have a bounce from the lower channel line. Fine, that's nothing wrong. However, this is the biggest channel we can get right now, the widest and the biggest channel we can get right now. So you can say, okay, we are below the 30-day moving average, but we are still above the channel we just bounced from it. So if there is a breakout below 20,716, bears are in control of the market, bulls are in trouble. Next target 18,914. So please keep an eye on the current situation on Bitcoin as well. It looks like traders, investors are selling Bitcoin, buying US dollar. US dollar is the king at the beginning of this trading week. We will see how this week will end. Basically, in the next during the next 5 days, it looks like right now US dollar is being bought all across the board. We will see what will be the result of this situation. Thank you very much for listening this and watching this analysis. I hope I will see you guys tomorrow. So take care and bye bye.